Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Snap. So last week Snap reported the Q4 21 results. The shares popped approximately 60%, and I'm going to go through and show you how even right now after the 60% pop, the stock is still very much attractively valued. I'm going to go through and show you about its path to profitability, including a discussion around the stock-based compensation, and that the multiple that investors are paying for the stock right now is towards the cheapest it's been for about 15 months. So I'm going to jump right in if you don't mind. Uh, there's a lot here to be interested about it. So, I mean, in the run up to this, so after the Q3 results were reported, the stock has just been sliding, just unrelentlessly, just sliding. And then last week on Wednesday night, Meta reported their results, and Meta sold off approximately, I think it was 22%, something like that, and Snap just got obliterated. You can see here just the dip on the like going into its earnings results, and then they reported like sizzling results, and the stock soared 60%. And that's why I really like investing, because it's just such a high contact sport. It's so visceral, it's really brutal testing, and it's never obvious, right? But after it's happened, it's like really stupidly obvious. Like, this is like, yeah, so easy. And I should probably come true and say that in hindsight, it's easy to build a narrative of why something was easy and clear and linear, but at the time it's nothing like that, right? And anyone that's invested in Snap in the past 15 months is now holding a loss. There's a lot of people out there that are disgruntled. They want to exit at any price. They just want to break even and just break even. So there's going to be a lot of selling pressure. This is going to be really volatile coming out of this. And, it's going to take a lot of, as we like to say in our household, stick-to-itiveness to really stick to this one. But yeah, I think that this is quite an interesting one. And, you know, the revenue growth rates were really strong. So they were previously guiding to be up in Q4 approximately 32% year over year. When the results actually came out, they were up 42% year over year. So there was 1,000 basis points relative to what they were guiding for. So it just, it's a sizzling performance from them. And their guidance for Q1 21 is to be up 39% year over year. Now, keep in mind that Q1 of last year they were up 66%. So against that more challenging comp, they're still aiming to grow by nearly 40% year over year. So that's really, really strong. Now, one aspect that people have always said about Snap is that, okay, this is just a COVID winner, and the number of users are going to just attrition out of, or churn out of their platform. And the figure that they point to is that, look, North America users are only up 6% year over year, but they're already reaching a third of the whole of the United States. So, I mean, it's kind of difficult to keep growing indefinitely. And when you look at it, I've contended in the past, if you look at my previous articles, and I remark still now, that this is now becoming much more of a global story. It's not so much about the US numbers. And if you have any doubts, yes, it is nice to see. I'll always make the case that you should always look at the number of users growing, and you can see here, yes, the North America, which is the most profitable user, is something to keep in mind. Yes, it is only up 6%, but on a global stage, the total user base is still growing, and to be up 20% against the more challenging comps of last year's Q4 2020, I think that's pretty strong. I think that's a very strong case, and the pricing power here is just really, really strong. They're doing a terrific job on that front, and you can see that's already being translated with the revenue growth rates just smashing through. The one thing that people often remark, and I see that point of view, is that the business is unprofitable, okay? And they have very lavish stock-based compensation. And even though the share price is down approximately 50% from its highs, the market cap has ballooned to 60 billion, and that's heavy. And for that, I'm going to put two bits of context there. First, you can see that the business, compared to 2020 as a whole, 2021 so free cash flow positive. So it went from negative free cash flow of 225 million to positive approximately 223 million. So there was a 500 million swing from negative to profitable. The other thing that I wanted to note is that I know that the reason why they're so free cash flow positive this time around is because the bulk of its cost is stock-based compensation. And you can see here, stock-based compensation was up 42% year over year, which is not a small increase by any stretch, right? For their part, Snap during the earnings call defended themselves and said, okay, yes, stock-based compensation was high, but it moves inversely to our share price. And if you look at the total shares outstanding, including stock-based awards, it was only up 4% year over year to 1.7 billion. You can see here in the graph with the little green arrow, it's only up 4%, and they note that the bulk of this is down to their convertibles. So it's kind of like, yes, they are paying themselves quite luxuriously, but on the other side, the stock-based compensation isn't really soaring up. The other side of the equation is that there is a bit of a lag between them awarding themselves stock-based compensation and it getting incorporated into a total number of shares outstanding. Moving on. So the stock is really trading quite cheaply right now. So it's priced at approximately 11 times, 12 times forward revenues. Now, here's some context, right? So in the past year, you can see here, people were paying often 20 times forward sales, sometimes higher than that, okay? And if you think about it, right, at the time then, Snap's path to profitability was still quite a while away. Right now, we know that the business is becoming very, very close to being GAAP profitable, including stock-based compensation. And the multiple that people are paying is the lowest it's been for the past, year. So it's the multiple is being cut in half, and the path to profitability is just really, really close to becoming positive. So I think with all that considered, I think that's really attractive. And I'll show you here. So the green arrow shows that their operating margins for Q4 21, they were negative 2%. And you can see compared to in the same period a year ago, it was negative 11%. And throughout the year, particularly Q1, they were negative 39% operating margin. So, there's really a strong improvement that they're making. Obviously, the Snap is highly seasonal, so Q4 is always going to be particularly, a strong period for them. And then they go into Q1, it's going to be like, this advertising in general is like that. They get a really strong Q4 period, and that's really what makes a big difference here on the bottom line profitability. But with all that considered, you can see that they're very, very close. Probably next year they'll already be on a GAAP basis. They'll already reach positive, maybe like 1 or 2% or so. Or it wouldn't be surprising to see positive net income of approximately 2% or so. So I've been following Snap for quite a while, and I've heard all kinds of comments aimed at this company. I've heard that it's a faddish company. I've heard that it's going to be gone by next year because, the people are just downloading the app and they use it once or twice and they never come back. That it's never going to be able to generate strong free cash flow. That the business is too expensive. I've heard all kinds of considerations, all kinds of pushbacks. And you're going to probably have your own pushbacks against this one as well. But when all is said and done, I believe that this stock, even after the 60% pop, is still very much attractively priced. Now, to preempt your question, what stocks am I buying? You should check out my marketplace. It's called Deep Value Returns. You can check them on board, get in touch, drop me a line, check what other people said, look at the reviews from my marketplace, and yeah, hope to see you soon. Good luck throughout the earnings season. Bye bye.